Hi, welcome to this video date, Saturday, it's the 9th of December. Going to be looking at a couple of trade setups today. They are going to be GBP, USD and GBP, JPY. We're going to the charts in a moment. Now, in terms of the British pound, I'm very, very bullish of the pound long term on certain currencies. Regular viewers will know we really like the upside potential in the pound against the commodity currencies. Fantastic move to the upside, still far more to come. However, in terms of the safe havens, I'm actually bearish of the GBP, short term in the USD for a swing trade and longer term against the JPY, because I think the JPY is going to have a massive rally in 2018. Now, just going to go to the charts. For new viewers, we're going to keep the charting very simple. However, what we are going to do is back up our view of the charts with our favourite tool in Forex trading, the COT, the Commitment of Traders Report. If you don't know what it is, simply click on the link beneath this video and join our mailing list and we'll send you more details. If you just want to watch the video through right now, just keep in mind, we want to trade with smart money commercials when their positions diverge from speculators, okay? I'm going to start with British Pound USD, and I'm going to start with the Commitment of Traders data.
British Pound against USD, we're just looking at the COT data first of all, and this chart comes from COT Base, graphically illustrates what the commercials in red are doing against the large speculators in green. Small speculators I haven't put on the chart, they're irrelevant in terms of what we're doing. Now, in terms of the COT, most of the time we are going to use it for extreme trading, but here I'm just going to use it in terms of group swaps. So I'm just going to explain what I mean. Obviously here you've got a big divergence. See the commercials heavily long, speculators heavily short. That warns of a big rally in the British pound, and it gave us a really good trade when we did that. You know, we basically generally pound bullish, okay? However, what we've seen recently is the commercials who basically since Brexit have been bullish of the pound, you know, once the dust settled, have been actually going to the short side in recent weeks. And, you know, it's giving warnings here that this rally could fail. Let me just explain what I mean. See here where the speculators cross and go long, the commercials cross against them and go short. It's not a big divergence, but the groups have swapped, okay, their view. What happens? The pound comes down, and it's about a 500 pip decline, okay? Now notice here, speculators drop short, commercials move long, okay? You get a rally, okay? And a decent rally at that. It's about 400 pips. Now we've got a group swap again, with the speculators coming in long and the commercials dropping against them. So I feel that we could now come down. I know what, or I think I know what the commercials are thinking, okay? I'll explain big fundamentals behind the chart in a moment. But when the groups actually cross over their positions, that very often gives you a warning sign that, you know, it's going to go in favour of the commercials. We caught this one, for example. I'm hoping we're going to catch this one. We shall see. Right, let's go to the daily chart and draw some British pound against the US dollar daily chart. I just want to compare what happened on this rally with what I think could happen on this rally over here. Now, when we looked at those changes, the swaps, okay, obviously divergence isn't very big, but the fact they swapped over is very, very important. And in terms of this rally up here, the speculators went from short to long, and the commercials went from long to short. And that was the biggest rate of change in the history of the COT. This blue candle here was the peaking of the bullish news. Everyone, not everyone, but the majority in the market thought that the UK were going to raise interest rates. Well, if they do, it's in the price, okay? We didn't think they would actually, and we did actually sell on this candle here. Look what happens. Nice move down, okay? Now, from our perspective, this rally is very similar to this one here. The rate of change is not so big, but what you do have is a bullish candle which is discounting the most bullish scenario. Now, when we saw this candle here, we're actually in this trade already. I'm just going to give entry levels for anyone new wanting to come in. When we saw the blue candle, okay, why was it such a nice candle? Well, all over the media was the announcement that the UK, Republic of Ireland, have basically solved the border problem in Ireland between North and South, which is important in terms of Brexit. Okay, so we were thinking at the time, this is just media chatter. They haven't solved the problem. If they have, there's probably not going to be any more buying. The buying is in the price, but if they haven't, the price is probably going to fall. Incredibly complex issue, that border problem. They haven't solved it yet. I still think they're going to struggle to solve it. Okay, so what we did was we've come in just through the round number 134.80, and what you get is you've got a triple top in place now. Okay, two candle bodies there, the tail of this indecision candle. I noted the COT report candle. Obviously, we get the data on a Friday, but it's actually compiled on a Tuesday. Basically not too far away from when or where the commercials and specs were going against each other. So I'm still very bearish. I think in the short term, British pound is going lower. So at the moment, we're at about 133.80. Okay, so we've got a little bit of profit. We've got 100 pips. We're expecting more, obviously. I feel, if we open lower on Sunday, then we will go. You got the 20-day moving average, which did provide support on this candle. I just don't think it will if we start to sell off. I think the speculator's going to get hit on stop, and we are going to go. That rally finished down here, and I think the present rally will as well. So 130.50, I think, is a good level to target. Although I do actually feel we could run on down to 129. But we'll have to see how this one goes. Obviously, you can check our updates in the member centre daily. But certainly this level here is on the cards. Where would you want to put your stop? Well, you got double top here. Okay. On the bodies. You definitely want to be back from there. Okay. We've on our position, we've come down basically to our entry. But I think that's 134.80. Coming in fresh, I personally don't think that would be a bad position to put the stop. It'd be a decent position. I just don't see us coming back up and taking out that double trend line. So, from, let's say it opens up at 133.80 down to 130.50. So what's that? Is that 330 pips, if I've done my calculation correct, against 100 risk? And of course, if you get a run on to 129, risk reward will be even better. But obviously, we've got to see how it goes. Also, in my view, you could hit the pound if it does rally back towards the double trend line resistance, or obviously this recent high. From our perspective, we just think it looks a decent risk to reward trade. Now let's go and have a look at GBP, JPY against the Japanese yen. And in terms of the way I'm looking at this chart, I'm taking into account this big rally up here in relation to the rally here. Just we looked at obviously those two rallies in the British pound. Anyway, I'll come back and draw my levels in a moment. But first of all, CFD net traders positions. We don't. CFTC doesn't give us data for the crosses, but as I've said in previous videos, very easy to work out. Just total up what the speculators and commercials have got in the two majors that make up the cross. So what do we get? 5.4 to 1 in terms of bullish over bearish positions for the speculators. Commercials are actually the mirror opposite, 5.4 to 1 in terms of bearish over bullish positions. Divergence 10.8. Regular viewers will know we always like divergences above 10. If we see this size of divergence, we'll normally always want to go with the commercials. They did get on this big rally up here the COT divergence plus 10, then what happens is we top out and go to the downside. Okay, so from when we did this trade, some of you might remember it was through 152 down to 147, so near enough a 500 pip decline. Now this rally here is, in my view, about to end. That is the exhaustion candle for me on Friday, and the reason I say that is, if I draw my line, okay, what we've got effectively, COT divergence builds up above 10 here, little poke through, come back, down, blue, this red one here, this tail, longer than that tail, no more buyers, we finish near the lows. Okay, so I think the buying is exhausted, and I personally feel that when the market opens up on Sunday, it's a sell at a new low. A low past this one, which is 151.65. Okay, where do I think we're going to go to? I don't think the 20-day moving average will provide any support. There's too many speculators to get hit on stop. Just like on this rally here, went to 147. I think the same will happen again. Okay, so that would be my first target. I actually think I'm very bullish of the yen. I think we could go even down to 143. I won't discuss the yen fundamentals in this video. I did it in videos last week. You can check them out. But very, very bullish of the yen going forward. I think it's going to strengthen on most, or no, I think it's going to strengthen on all major currencies actually. So from our perspective, decent downside potential. With this just being the first target, we could get the run on. Where would you put your stop? Make sure it is well back from this tail. I've got my stop behind 154, so that's my risk. Got about 2.5 to 1 in terms of risk reward to here, and if we run on, it's going to be about 4.5 in terms of risk reward. For me, it's a setup that I like. When I get exhaustion candles like this against a previous level that was rejected effectively, COT divergence plus 10 on both setups, I think it's a decent risk to reward trade. All right, that is my review of GBP, JPY.